Welcome to the Same Day Podcast, where we discuss driving incremental business growth and other topics related to real estate, property management, and entrepreneurship. Now, to the show at hand.
Hi there, Yoni Schmidt here, hosting today's episode of the Same Day Podcast, where I connect with top real estate and business leaders. Past guests include Monica Gilroy, an attorney specializing in fair housing laws, Lindsay Davis, CEO of Spartan Invest, Mark Miller, CEO of the Hilton Tax and Wealth Advisors. Today's episode is brought to you by Keyrenter Property Management. At Keyrenter Property Management, we are a full-service property management company helping our clients buy, renovate, and operate real estate assets. We help our clients build wealth while taking the headache out of property management. That is why no matter what rental you have, single-family homes, condos, townhomes, or apartments, we have the management solutions for you. Go to KeyrenterPMC.com or email us at info@KeyrenterPMC.com for more info. Today on the show, we are thrilled to welcome David Flores Wilson, a seasoned financial strategist, thought leader, and managing partner at Sincerus Advisory. David's work spans holistic financial planning, investment management, retirement strategy, and helping individuals and businesses align their finances with their life goal. With years of experience in personal finance, he's known for helping clients simplify their financial lives and taking intentional steps toward financial freedom. Whether you're a busy property manager, a real estate investor, or professional looking to make your money work smarter, David has the insights that will resonate and inspire. Welcome to the show, and thank you for being here.
It's great to be here. Looking forward to the conversation.
Love it. David, let's start with the basics. Break it down for us. What does all of that mean, right? What does it mean in practice to, go, and what's the difference from traditional financial advising?
So what we try to do, right, for the families that have entrusted us with their assets as their thought leader, as their thought partner, what we try to do is essentially help them save money, help them make money, and make good decisions in their life. And so, whether that comes to buying or selling a business or a property, whether it comes to where they want to invest their liquid positions, and how they want to implement different tax strategies, whether in their personal or business life, we're going to give them advice and find ways to lower their risk, help them make money, help them save money. And so, yes, I work with, I have a financial planning firm here in New York City that has a client base primarily of business owners and entrepreneurs, trying to,
nice.
Mostly 30-something, 40-something, and we really just try to move the ball forward really with them in their financial lives.
Nice. Tell us a little bit about common financial planning pitfalls that you see with professionals and business owners. What do they do? What do they not do? And what would you advise?
Well, I think we have to start with the basics, right? I think that generally there's 5 pillars of financial planning. And if you're doing, let's say 3 or 4 of these, right, it's you're going to be doing well and growing your net worth and achieving your goals. And so, it's basic, meat and potatoes, right? It's a saving, it's investing, it's protecting what you have, it's managing debt correctly, as well as minimizing the risk to your financial life. And so each one of those you can dive deeper. But I think that is, people kind of think, simplifying makes a lot of sense and saying, okay, well, am I saving correctly? Am I investing that money tax efficiently? Am I investing that money with low expenses? When it comes to the risks, am I protecting, both my income and my assets? Because oftentimes people's income is the most valuable asset they have. And then when it comes to tax strategy, there's just many different ways to minimize taxes and to do that in an appropriate way that's for the owner or the family. And there's also lots of different ways to do that. And I think that it's a year-round sport when it comes to minimizing taxes, in terms of it's not just sort of, okay, get to the tax deadline and what can we do? It's about looking at these kind of different strategies, if you're a business owner, looking at different entities, different types of savings vehicles, as well as the investments themselves, whether that's real estate or securities, saving money on taxes. It's, just small changes people make to saving money on taxes over the course of their lifetime can have a profound effect, right? I ran the numbers the other day, and a very young person who was making around $350,000. They're in their early 30s. If they reduce their sort of effective tax rate 5% for the rest of their life, by the time they're 65, that's another $2 million. And so it could, and so yeah, it makes a lot of sense to understand the strategies, to build the right team around you, and then go in and implement the appropriate strategies when it comes to saving taxes.
That's interesting. I'm definitely curious to know how you can minimize your taxes 5% a year, for myself personally, and also for our listeners. But I sat for breakfast one morning with a billionaire, actually, and I'm not going to name him because I don't want to expose him. But I said to him, how do you like minimize your taxes? How do you not pay taxes like the big dogs, Jeff Bezos and Mark Zuckerberg? And you hear all these corporations who they're not paying taxes. And he said, for me, I find that every year that goes by, the larger the tax bill that I had, the happier I was. And it just means because, he was earning more and more and more every year, at a profoundly, higher step, right? And he was paying a lot more taxes. What would you say to something like that?
Yeah, you keyed on a very important point, right? That sometimes as the CPAs love to say, right, you don't want to have the tax tail wag the dog. And so, we do meet sometimes, whether it's a business owner or a property owner, kind of doing every last thing to think through, sort of running every questionable expense that's in sort of a gray area through the business. Perhaps they met someone who's sort of selling these sort of tax shelters that are, might be listed transactions. And so, they're rolling the dice a little bit that says, oh, you know what, I'm going to save taxes now. And when the audit comes, they'll claw it back. But in between, I will have invested the money. And so, that's not what we generally want people doing, right? I think that feed that, yes, if you're focused so much on the minimization of tax, it could be to the detriment of the business and your focus on growing, the top line and bottom line when it comes to that company or property. And so, absolutely, right? I think we, I personally, I want to pay my fair share, but there are strategies in the in the code, many more new strategies that came through with this tax bill that was passed in July. And I think that oftentimes it's a process, right? It's like, hey, these are a spectrum of things that might be appropriate. These things over here we think are too risky. They don't. These things over here don't apply to you, but these things, if consistently applied, would help you sort of maintain more after-tax dollars, and so you could reinvest it in your business or your financial future. And so, what you're saying is, absolutely.
Yeah. For many of our listeners who are real estate investors and, they own portfolios of, single family residential homes and small multifamily assets, right? We often see and hear in our industry right around, this time of year, September, October, November, December, people saying, oh, I need to buy another house or two to, start spending money so that I can avoid paying taxes, right? Increase in and inflate my expenses essentially, right? And kind of defer that tax bill or lower that tax bill. What are your thoughts on that? Because you say it's a year-round sport, right? And people who are thinking about it in the fourth quarter of the year, right? Are they playing the game wrong?
Yeah, I think you're getting to one issue that we do see from time to time is that essentially if people sort of buying the deduction, right? And so if you're spending $10,000 and you're in the 37% bracket, you spent $10,000 to save $3,700, right? And so you're net still behind if the return on investment of what you purchased, doesn't make up for that expense, right? And so I think that it's business first, right? In terms of any sort of investment in property or real estate, it's what's the actual rate of return on that investment on an incremental basis. And so If there are things that you are going to purchase, right, then yeah, it makes sense to go forward and do that. I think that you'll see oftentimes say, oh, we're going to do cost segregation studies. We're going to get those deductions up front. I think that's what's interesting is that if someone's not actively in real estate, well, then you're going to get a bunch of losses, and where are those losses going to go? Right? Are they going to? It can't go toward your business that's non-real estate. You have to have, you have to have other passive real estate losses, and so. Sometimes we'll see people, I want to do this short-term rental strategy or whatever it is to sort of just, I'm going to take a bunch of money because I'm going to pass through losses. And sometimes it's just not appropriate. And other times it is, right? And so, there's no substitute for doing the numbers and running the projections and really evaluating that expense. But I think that for those families that are intergenerationally focused, right, you can, with real estate, you can depreciate it all the way down, and then you can pass it to the next generation, and then they would receive it tax-free as long as they didn't pay estate taxes, right? As well, I think we've all seen people, depreciate a bunch of things, and then when it comes to their property, and then they're like, okay, well, I'll do 1031 exchange, right? And then they're kind of scrambling, and so maybe they overpay for that new property in that 1031 exchange. I think I was in New York City in my 20s, and all of a sudden, I was renting at the time, and someone came in with it's like, hey, landlord changed. This offer came in unbelievably, 15% above market, and you guys got to move. And
wow.
And so, that person didn't make a pretty good investment. I mean, they saved a bunch on taxes, but at the time, I'm not sure if that real estate investment worked out because they overpaid it for about 15% of market of the time. So.
Wow.
It's elements, and so buying deductions never work, but being very smart about it, accelerating something that you would have bought in January or something anyways, it makes a lot of sense. For example,
I guess I read a little bit about you. It says you take a holistic approach to finances. How do you help your clients align their investments with their personal values and their lifestyle goals? What is it that you look at when you're sitting down with a client and you're planning this out?
Yeah, I think we want to be very pragmatic, right? That people have values and they have goals, and over time, those values and goals change. And so, early on when we meet people, when we start to engage them, before actually giving them advice, we want to know where they're coming from. What's important to them? And so, is it family? Is it financial freedom? Is it philanthropy? And then once we, when we're literally sort of go through an exercise, before the pandemic, when we used to meet with people more in person, it was like we had these cards and we whittle down these different value cards from 50 to 10 to 5. And, these are your values as we sort of sit here today, right? And then we'll go through sort of like, okay, well, what's your long-term goal? Right? And so some people just don't know their goals yet. And so we'll tease it out. And then as we dive deeper in discovery, well, what are the financial activities that you're doing, right? In terms of saving and spending and minimizing taxes and managing debt and so on. And, we'll try to say, are we seeing alignment here, right? Because you're telling me that, family is the most important thing and you value your freedom, and yet, you're sort of spending 70 hours a week in the business. And so maybe it makes sense as a goal to say, hey, let's restructure the business over time. So that way you're less central to the business, and that way you'll get more in alignment with your values. And again, this is, everyone's different. And I think that we also have to be very practical as people grow and change, that their values will change. And so we'll always want to step back and say, okay, well, how do we feel about things now? Right? And what's important to us now? And so I think that is super important when we work with clients.
Wow. So you'll actually come into the business and you'll help them restructure a business to make it to where it's not as reliant on them individually? Or am I getting this wrong?
Yeah. So I think
better.
In this particular case, right, I think there's different exit planning concepts, right? I think when it comes to exit planning and people sort of thinking about their what they want to do with their business, long-term, retirement, sell the business. Oftentimes what's good for exit planning is also good for the business and good for them, because oftentimes when a buyer looks at a business where the owner is head of sales, running IT, has all the business processes in their head, that's a less valuable business. And so we get this sort of double benefit in that situation if we can bring in the right consultants and say, hey, you know what? Let's develop systems and processes so that it's not all just in your head only. Let's as well start to build out the management team, and that way you've essentially created a more valuable business. Again, if this is what they want to do in terms of their goals and their values, right? Because I think that sometimes some business owners they just want to be working in the business until they die, right? And others they want that next chapter. And so I think that part of the work we do is to really peel back and say, are you fulfilled now? If not, what will be fulfilling for you? And then let's make a plan, on the financial side, on the personal side, and the business side, so that you have alignment in all those areas, and that way you're achieving your goals and within the framework of your values.
Yeah, wonderful. Tell us, I guess, in this stage of economic uncertainty, what's your view on liquidity and planning to have dry powder as part of your portfolio? How important is it? And should people really keep dry powder, and in your experience, would be dry powder?
Yeah, so I think that's a big part of it, right? So capital allocation is the name of the game. And so when we think about, most people, we think about sort of people's balance sheet is three buckets, right? You kind of have your safety assets, your cash, as well as I would consider the equity in your home, essentially your safety assets. And then I would sort of second bucket is your market bucket. And that's just your 401k money or whatever sort of in the stock market, right? And then I would call your sort of third bucket, your aspirational or your moonshot bucket. And this is where your investment real estate would go in. If you're invested in private companies, venture capital, hedge funds, that's all that bucket. And I think that there is no magic allocation between the three buckets. But I do think that if real estate is what you're interested in, well, then yeah, for sure, you need to have, if you don't have access to credit lines, well, then yes, you need access to capital if there's an unforeseen renovation or a really good opportunity, right? And I think that it's sort of, cash is an emergency fund. It's protecting against a risk, but it's capital for a potential opportunity as well. Right? So it cuts both ways. And so, for some people, they may not have a big market portfolio that they could borrow against at low rates. So yes, it might make sense to have more cash. And I think that, again, it definitely comes to someone's comparative advantage, because I think some people are better than others when it comes to timing different markets and understanding what's in the marketplace and what's cheap and what's accelerating in terms of growth prospects. And so some strategies really just take more cash than others, right? I think, we work with a family that owns, a lot in the hospitality business, and they own, a lot of motels and hotels. And so, they have a different liquidity framework than, we have another client that's doing flips, right? They need that, they want to move quickly, they want to renovate, and they want to do that, and it's not tax efficient because they might flip it and, after the renovations within 12 months, but because the returns and they found some inefficiencies, they can do that. And so, it really depends on the situation, but, just kind of thinking through lines of credit, cash, borrowing against securities, developing relationships with lenders, those are all important things. And so, some more important than others, right? So.
Yeah. And for those in real estate, either investors or managers, what unique financial strategies should they be considering right now?
It's so different, right? So I think that when it comes to real estate investors, it's really just knowing your comparative advantage, right? And so what are you really good at? Because I think that, some people are like, oh, I'm going to diversify. I'm going to buy some residential. I'm going to buy some commercial. I'm going to buy in this market. I'm buying that market. Yeah, I don't see where the inefficiencies are there, right? Oftentimes. And so, maybe it makes sense to be a little more of a passive investor, but for the people that really build up the skills, maybe they have, the right network of people to sort of help them manage the property. Maybe they've, have good relationships with a property manager that's, it can really drive value for that property. And so it really depends. And so, but I would really just oftentimes encourage real estate investors to just be very systematic and disciplined about modeling out your assumptions and saying, okay, well, what's the realistic occupancy here, right? Like what's the renovation budget going to be like? And then, running that projection and kind of comparing that on a project by project basis. And so I think that, oftentimes we see, very simple valuation saying, oh, well, I can pay X amount for this one. And, it's cheaper than, Y times this other property. I'm like, well, it's more complicated than that. Right. And so just being very disciplined about the framework for evaluating your real estate. Because, often, some people have the hot hand and go with their gut and it works out well for them. But, for the rest of us, let's be disciplined about our assumptions. And so that way we have, if we know it's a good investment, like how good is it relative to another? So,
yeah, it's, equity comp, rent, equity in homes, all that, maybe a small business even. What's the first step that you do when pulling everything together and, when they're sitting in front of you and you're trying to help them come up with a plan for their life?
Yeah, I think it's, we talked a little bit about it, right? In terms of just really understanding their values and their goals and what are they currently doing. And that's part of a broader discovery process of saying, hey, like, what are you doing in each of these aspects of financial planning? And what are you doing on your taxes? What's going on the estate side? What's going on with your real estate? What's going on with your, your liquid investments? And so it's really that deep dive and kind of understanding the full picture. And then, we'll usually identify a couple issues that really need immediate attention, right? There could be, a tax saving technique that we have to take advantage of before the end of the year, or, maybe they don't have their estate plan in place. And so we'll sprint on those particular topics and then, get into sort of a regular cadence of doing discovery on a quarterly basis with clients, peeling back and we kind of have themes, right? So the first quarter of the year is sort of just kind of, resetting goals and values, getting ready for tax season. And then we'll discuss, different strategies kind of in the summertime, pivot to estate planning and understanding the risks both in their business and property and the personal side in the fall. If they're an employee, the benefits and open enrollment. And then we'll do sort of tax projections to see if there's anything we can do. And then we'll execute that towards the end of the year. But of course, managing the portfolios, to optimize for return, minimize risk and minimize taxes throughout the year as well. And so that's generally how the process goes. But I think that, sometimes, we'll be speaking with a client, multiple times a week because there's something super important, right? And, they might have had a death in the family, or they might be thinking about selling their business. And we'll really have to roll up our sleeves and kind of think through all the different aspects of that, quantitative, qualitative, financial, non-financial. So that's generally how it works.
Yeah. All right. Tell us, I guess, what's one myth about wealth building you wish more people understood, and how would you debunk it?
Yeah, I would just say that wealth building it's a skill, right? And I think that oftentimes people don't think that, they're sort of investing with their money, that they should be investing in themselves, right? In that knowledge around financial literacy, around what are the ways that they could make money and what are they good at in particular, right? And so some people are, they're going to climb the corporate ladder and they're really good at that. And other people are good at identifying properties, right? And so just really, once you go through that, when we talk to sort of younger people, it's really like, okay, well, you got to go through that experimentation phase and saying, okay, well, what am I kind of good at? What am I interested in? And so And that really applies not just to people's career, but how they make money on the investment side. And so building wealth by just investing in yourself, learning a lot, and just following those sort of pillars of financial planning, right? When it comes to kind of saving money, investing, minimizing taxes, and so on.
Mm-hmm. Awesome. Well, David, this has been insightful. Anything else you think we should know? Anything that I didn't ask?
Yeah, I mean, I could talk forever on this stuff. I love it, right? But I think you're focused on the property area. I think that the real estate investing it's so powerful, right? In terms of the ability to buy, manage, and sell real estate, all the different tax advantages, all the the ability to lever up in a way that you can't do with stocks and bonds. And so just highly encourage people to say, okay, well, if this is for you, to really learn it, to really understand the techniques, really build a team around them that can fill out some of the their knowledge gaps, and but also to think about the whole balance sheet too, because I think sometimes real estate is not as attractive, and you're like, okay, well, maybe I'll be in a diversified portfolio as dry powder and then come back into real estate later, right? And so I think that's kind of an interesting
diversification, right? That's the name of the game, right? Your real estate is hedging you against inflation. Your stocks and bonds and your assets are a good way to grow your powder, I guess, in a sense, right? Because they're a lot more liquid than a home that may take 30, 40, 50, 60 days to sell. So yeah, I agree. Diversification and then thinking about the whole balance sheet is as important. So if you found this interesting, reach out to David and he can help you with your balance sheet, better understand it, help protect it and grow it. Awesome. Thank you so much, David.
Great being here. Thanks so much for chatting.
Thanks for listening to the Same Day Podcast. Tune in to a new show each week and be sure to subscribe to get future episodes.